Jerome Powell, your friend and mine, has reassured the markets that the punch bowl will not be removed anytime soon. The markets constantly need to be pacified to keep this excessive, over-exaggerated trend continuing. Otherwise, money would find its way into less risky bets. But with record low interest rates and the promise of years of free money ahead, why bother? You came here for the truth, so let me unveil that for you. That's the question I have. I understand what's going on with investors today. If you take the maximum amount of risk, you are rewarded, and that's just the way it's been. It hasn't been that way all the way since 2009, but as we move further and further into the cycle, it looks like that's the case. I'm going to cover what the Federal Reserve did. And let me just give you a little spoiler. They didn't change anything. Then we're looking at what your friend of mine, Jerome Powell, J. Powell, this individual had actually slipped up, if you will, and mentioned something that, in my opinion, is absolutely true. We're going to talk about that. I'm going to give you some updates that you need to know. A lot to cover. Let's go. Fed holds interest rates near zero, sees faster growth and higher inflation. That's pretty obvious. They didn't say anything that is, in fact, worthy of even having one of these meetings, except when you get the reporters out there, because that, even though they're asking softball questions, it's not reading from a paper in most cases, although he does turn into the paper sometimes and reads off of it when they have to give a specific message out. But it's sort of off the cuff. He's saying things, and I'll show you what he said in a minute here. You've probably already seen it, but this is really important that the Federal Reserve itself acknowledges. This is a quote from Jerome Powell, okay? Parts of the markets are a bit frothy, and that's a fact. He didn't specify which, and you don't have to look too far for the candidates. Right here, he was basically the reporter was talking about GameStop. He's talking about other things. But if you really look at it, I mean, it is pretty obvious when you see the stats. The Federal Reserve Chairman answered, quote, some of the asset prices are high, and goes on to further to say, I won't say it has nothing to do with monetary policy, but also it has a tremendous amount to do with what's happening in the health aspect and reopening of the economy. That's really what has been moving the markets a lot in the last few months. Sure it has. Well, at least they acknowledge, number one, markets are looking frothy. There we go. And that it has to do with monetary policy. They're actually finally admitting that it is, in fact, to do with it. Even though it's on such a tiny degree, at least we got that from the Fed. And then, of course, you can see right here, Powell told a post-meeting press conference that the recovery had been faster than expected, but it remains uneven and far from complete, and the economy is a long way from our goals. And this is, of course, how they can continue to push out their policies, because according to their statistics, they need to do it in order to help. We know that every action that they take is, in my opinion, extremely terrible for its actual ability to achieve those goals. I don't get it, but anyway, that's what they're saying. This title says it all. Fed Chair Powell gives stocks the all clear to keep moving higher. I mean, come on. How do you deny this? Investors should be looking at this as a clear and obvious sign that you should be taking the maximum amount of risk. I think it's pretty obvious. The Federal Reserve is giving you that permission. The only question is, if stocks were to come down significantly, would the Federal Reserve put some money into your bank account to make up for those losses? Are they responsible in the end? That's a question for you. The Fed upgraded its view of the economy and said that inflation could rise. Oh, but it's temporary. Oh, that's right. Just like the introduction of income taxes, they're temporary. Absolutely. I mean, I believe that. I believe anything that the government tells me. But Fed Chairman Jerome Powell said that the central bank was not close to discussing winding down its bond buying, which would be a first step toward ultimately raising interest rates. So that's the expectation, that they would start to taper, then they would increase interest rates in that order. We don't know what's going to happen, obviously, but that's the expectation. So at this point here, interest rates going to remain low, mortgage rates remain low. That is, of course, bullish for both the stock market and the real estate market. And then, of course, everything else. That means you can have cryptocurrencies rising as well, because in my opinion, there is a direct connection with risk assets and the correlation to interest rates. You bring the interest rates down, you're going to have people put money in places to get that yield. They want that. I mean, look at the demand. Despite what has happened with bonds, look at the demand for bonds. Now, it has changed over the years, there's no doubt, but you're talking about trillions upon trillions upon trillions going into not just the negative yielding bonds, but other bonds as well. And there's barely any return there. Why? Because it's quote unquote guaranteed. So they are still being included in portfolios everywhere. At the bottom there, since the tapering of the bond program is expected to take as much as a year, market pros said that Powell signaled that rates will stay low for a long time and the environment will be positive for stocks and other risk assets. Absolutely. That's what the market is signaling. That's what it's getting from this signal, I should say, at this point. You can watch this right here to get the little clip of that. And of course, as always, it will be in the description under the sources. This is his quote. Some of the asset prices are high. You are seeing things in the capital markets that are a bit frothy. That's a fact. Okay, that's him saying that. All right. The overall financial stability picture is mixed, but on balance, it's manageable. I love that. I love that. Just like the national debt. The national debt, it's manageable because interest rates are so low. I mean, this right here is comedy hour at the Federal Reserve. You know, some people love to turn on the Netflix and whatever other streaming services there are. You know, they put on a comedy, they have a couple laughs. Maybe they want to watch some old slapstick comedy, Three Stooges and so on. I absolutely love to listen to the Federal Reserve lie to everybody, and not just the lies, it's the people. Then you hear the people repeating it as if it's actually true. To me, that is just the funniest, absolute funniest thing that we can read and listen to. It's fantastic. No news is good news as far as the market is concerned, because it means the Fed will remain accommodative for the near future. This is a Goldilocks Fed. It's exactly what the equity markets are looking for. Absolutely. Everybody knows that. And this is the absolute fact. If they would have even suggested or hinted at suggesting that they would be increasing interest rates at any point in the next year, 2 years, the markets would have taken a nosedive. Absolutely. But here they are, reassuring everybody that everything's going to be okay. As a result, you see what happened with the dollar. It came down a little bit. There's always going to be that reception with the dollar as a result of what happens with the Fed meetings. As soon as they act a little, I hate the word that they choose, but dovish, the dollar will decline somewhat. And this is, of course, in relation to other currencies, not its actual true value, which has declined significantly over the years since the creation of the Federal Reserve. Yes, things are a bit frothy, Jerome Powell, and I know that you've seen this. The S&P 500 price earnings ratio, the PE ratios, never been higher. Take a look at that. We are going into excessive territory today, but I guess who cares, right? I know about the introduction of all these new packages that are coming out, stimulus packages from the government. And the expectation here is that this is going to boost the economy long term and, of course, remain competitive with China as China grows using their public works projects, using their mass population, trying to pull people from the rural areas into the cities, get them working, get a stronger middle class, and so on. The weirdest part about it is that there's a claim that it won't have any negative side effects. Won't have any negative side effects. Look, you can print all the money you want. You can create as much deficit as you want. Expand the debt to new territories, but know that it absolutely comes with consequences. And you have to balance that. That's what they're trying to do. And of course, they always take it too far. Historically, any country that does it takes it too far. So watch out. Be very careful. Global food prices have been rising for months, putting additional pressure on the world's poorest people. You can look through this if you're interested. The point I wanted to make here is all about social unrest. Your country may not necessarily have that many people in poverty, but there's a large group and a growing group of people that are unfortunately right around the poverty line. And you have the median salary in the US today being something like, I forget what the number is, $33,000 or so. $33,000. You have increasing costs put on these people. Suddenly, you've got a real problem. And that brings me to the Money GPS Insights. In this section here, I always like to talk about how people can deal with the information about what we are seeing. And I think it's really important to look at your financial situation. If you think that food prices are going to rise in the next year, if that's your expectation, then there are certain things that you can do, very simple things. For example, if you know that you can buy large bags of rice, and that rice is going to be okay. You can put it in an area that's going to stay in good condition. You buy them now, you get the price from today, not next year's price, okay? That's just a simple example. And the same thing with other food that is storable, beans and things that will simply store in containers. You could put them in an area that will hold well, seal those jars, seal those containers, have that stay, and the price remains what you bought it. You don't have to buy at next year's price. And that's, again, just a simple example. The same thing could be said about investments. If you expect there to be food inflation, there are many different companies out there that will benefit from that. If you think agricultural commodities are going to see a boost, you can get in that in different ways. I don't give tickers. That's not what I do here, but I think it's pretty simple when you look at what's been happening. If there's higher inflation, what kind of companies are going to benefit from that? There are going to be more and more winners in this, that for the people who are paying attention. And it's not necessarily just buying particular stocks. It's also in what you do in your daily life. It's not just food, but of course oil as well. Goldman Sachs forecasts the biggest jump in oil demand ever. That to me is very huge. We'll see what happens. Essentially, the economy is going to come roaring back. We'll see if that's the case. And if it is, oil will be in high demand. What does that mean? Of course, the price. The price is going to go much higher. The demand is going to accelerate. Are they going to have enough? They're, regardless, in the news, they're going to tell you that there isn't enough at this time. There's a shortage just like everything else. And that's why I had explained previously in maybe yesterday's video, the one before, you may see gas shortages in the United States and other places. So watch out for that. Here's the US crude oil production, and you could see what happened at the beginning of 2020. It started to decline just slowly, and then, of course, basically down to nothing, and we are still a long while away from getting back to those levels. So we'll see what happens. You need higher prices to make a lot of the US production profitable, so I'm interested to see what happens with this. Quick note that I think is important for people who are keeping an eye on what happens with Bitcoin and Tesla and Elon Musk and so on. You could see they've Portnoy, what do you have to say? So am I understanding this correctly? Elon Musk buys Bitcoin, then he pumps it, it goes up, and then he dumps it and makes a fortune? Listen, I own 1 Bitcoin, but Bitcoin is exactly who we thought it was. Just don't be the last one holding the bag. He said this, he replied, no, you don't. I have not sold any of my Bitcoin. Tesla sold 10% of its holdings essentially to prove liquidity of Bitcoin as an alternative to holding cash on the balance sheet. Very interesting. You can take what you want from, what you want from that. But I think that's really, really interesting to me. I think it's important to know that dynamic as more and more companies, more and more institutions buy it up. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me. I want to thank you for that. Simply by clicking a button on your screen, you help this channel out. So thank you. If you want to learn about e-commerce, you can do that at the AmazonGPS.com for free. If you want to know about the financial system, everything is in here in these 2 books, top to bottom, A to Z. It's all here. Click the link and it's right there for you to flip through the pages of the books themselves. You can do that. And have you seen this video yet? I'm talking about Russia dumping the US dollar. This is a really popular video right now. You definitely want to check it out. Click it and I'll see you there.